This is Marek here today to talk to you about what happened with healthcare stocks and the stock market at large last week, and more importantly, puzzle out what might be happening in the coming week. Now, last week was a wild and somewhat wacky one. Obviously, the debate, the presidential debate that is, went Mitt Romney's way. But don't go into autothink and assume that the market has an active, open, rooting interest in a Republican victory. Most of the big traders who move the market know that by most long-term measures, stocks perform pretty much about the same under Republicans and Democrats. There might be a shade better performance for bigger company stocks under Republicans and smaller company stocks under Democrats, but it's mostly a rounding error. Now, what we also know is the stock market is enamored of known quantities. They detest uncertainty, and nothing is more uncertain than a presidential race that goes down to the wire. So beware and be aware of this. As if to complicate matters even more, after Obama's dismal showing on Wednesday, the job numbers came out on Friday, and they appeared to favor him, putting momentum back on his side. Now, I don't want to put on my hip-high boots and wade into this issue too much. Suffice to say that September job numbers are often very vulnerable. So beware and be aware of October's numbers. Outside of that, healthcare stocks performed pretty well during the week, as they often do when uncertainty abounds. Now, Pfizer deepened its counterattempts in India, filing a complaint with the courts. Obviously, Pfizer and plenty of other drug companies are really running into a buzzsaw in India, where there's a lot of potential, but also a lot of active issues with patent and patent infringement suits and all of that. So obviously, keep your eye or two on that. As for Merck, well, they did really well in phase 2 trials of their long-acting diabetes drug. This is good. Considering what happened to Glaxo, though, and the heart issue, you know that the central and essential issue of phase 3 will be how this drug interacts with the heart. There's a lot of potential here for Merck to gain access or hold on to market share in the diabetes field. But this heart issue is obviously one that traders are looking toward, with knowledge of what happened with Glaxo. Okay, also during the week, we had bad news from Hewlett-Packard. We cut numbers to ribbons over the next period of time and promised a comeback, but years out. Now this, traders are waking up to, is really problematic, as HP and by extension Dell really now at this point you need to call their viability into question. The tech market, along with healthcare, has been driving this market, but these two old rusty tech stocks are really stubbing their toes. They've just been kicked in the shins by tablets and smartphones, and they're really having trouble adjusting. That's something to look at. You might have also heard that David Einhorn, a famous hedge fund investor, came out with some of his favorite buys and favorite suggestions for short sales. What's important to remember with Einhorn is he's much more successful with shorts. He's a little bit inconsistent on the long side. So, for example, he came out with a trumpet of General Motors. Be a little aware that his performance on the long side tends to be inconsistent. And of course, this week we had auto sales numbers, and Toyota and Honda continue their comeback from their dormant state after this tsunami, a dormant state that General Motors took advantage of. Many wove this into a tale of their long-term comeback. That wasn't so. They were sort of taking market share from their sleeping giant competitors, and now it's not there for the taking, so that's something to look at. Now this week, this coming week, will be one all about earnings. After the Columbus Day lull, we start earnings season, and earnings season starts, as always, with Alcoa's report, which will come on Tuesday. Now traders are waiting with bated breath for this, because just recently FedEx, a harbinger of what's happening in the economy or what's going to happen, they cut their numbers to ribbons. And this was seen as really bad news. So traders had been nervous ever since. Now, Alcoa is expected to report flat earnings. If they're down, and I have a sense, looking at some of these economic numbers, jobs aside, that they'll be down, the market will be in an ornery move. We have JP Morgan and Wells Fargo, the financials, reporting at the end of the week, and that will also give us a beat on what the financial companies are doing. Merck, Pfizer, J&J, they report 2 and 3 weeks out. So obviously stay tuned and stay attuned for that. Might remind you, always listen to webcasts of the earnings conference call on the company's websites. It's really the best way to hear what big traders are hearing. Things. Don't rely on the media accounts, don't rely on Wall Street analysts, or don't rely on what you might hear from a friend or a colleague. So that every week we're going to touch upon a drug that might be up for approval by the end of the year. This week we're going to talk about Alexis's thyroid cancer drug. Outside of that, if you disagree with me on any of this, and you surely won't, but if you do, feel free to tweet me. My Twitter handle is down below, but it's also at MarekFuchs. You're also more than welcome to tweet me any and all questions. And most of all, have a happy, healthy, and profitable week. We'll talk next week.